The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon, everybody. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I can be reached at themainstreetcode.com, or you can always reach me at 631-647-4694. And when we talk about code, we talk about choice, organization, direction, and education. And if you listened to us last week, I may change that C word to communication, because when we're dealing with families, we need communication between multi-generations to take care of what our needs are. So this week has been a very volatile week in the stock market, as we've all seen. It went down. It went up 1,000 points, then 900 points, then went down 1,000 points yesterday. Extremely volatile. And what's causing all this volatility is that the fixed interest rates and the Fed are net, the 10-year yield is up over 3%. So this high interest rate and continuing perspective high interest rate is going to lead to volatility and a lot of the institutional money moving out of stocks into fixed investments. Now, if you're retired or near retirement, can you afford a 10% loss? Can you afford this volatility? What if you need care and have a 10% loss? Can you recover? Can you recover a 10% loss with 8% inflation? Think about that. Let's say I lost 10% of my money, my assets this year, and inflation is way up, and the cost of oil and heating my home, I heard this morning $6 a gallon to heat my home, and to put my gas in my car and food and everything with the cost going up, and then I have a 10% loss of assets. How am I going to recover from that? Do I have enough time to recover from something like that? So a lot of people are moving into fixed investments, and we've talked about interest rates, and a lot of people are sitting on money earning nothing. They're sitting in bank accounts earning 0, maybe 1% in CDs. You're losing money by your money not keeping up with inflation. So we have some alternatives that are much, much less risky. And we've talked about fixed annuities, and there's two types. One is we now have rates over 3.5%. Try getting that at your bank right now. And I was talking about this 3 weeks ago when the best CD in the market was paying 1%. 1% on your money. If you're making 1% in a CD and you're taxed on it, after 5 years, you only have $104,000. That's nothing. That's terrible. But they may give you a lollipop at the bank, and that's nice if you want to pay, for your lollipops. Meanwhile, the bank is investing your money in loans, making 20 to 25% on your money. So on that $100,000, that bank has made $100,000 in 5 years. They've doubled their money, yet they've given you something very small. We have fixed annuities that are paying 3.5%, and guess what? You're not taxed on that money until you use it. So that money compounds at near 3.5% right now, you probably have over 120,000 in 5 years, just in 5 years, without taking any risk whatsoever in some of these fixed annuities. Now, let's say you really like the market, but you're a little nervous about the volatility. Well, there's another option out there where you can actually buy an index. Even in New York, they have these. And an index annuity will guarantee that you can participate in the market. And maybe now the caps are up to like 6.5%, where you can possibly make 6.5%. But if the market tanks, you will be at 0 or 1%, where you won't lose any money. So it's no risk investing, and still have, it's not in the market. It will just track the rate of the market. This considers it still a fixed investment, but you can't lose. So if you can go from 0 or 1 to 6.5, or have 3.5 guaranteed, and not worry about the ups and downs of the market every day, I want you to sleep at night. It's very important. So annuity sales are going crazy right now. Institutional money is moving into fixed investments. People talk about bonds. Bonds go up and down. There was a time where bonds actually lost a ton of money. You know, I heard on one of the shows that people were talking about that, even AAA bonds. So there are alternatives besides the bank and besides the market where your money can be guaranteed. Now, all this week, or for a couple of days this week, I was up in Albany. And what was I doing in Albany? I was visiting legislators and senators and government people inside New York State, and at the end of the month, I will be going to Washington, D.C. Main part of my business is working with agents and advisors across the country on matters of insurance. And as part of that, I take it as my responsibility to help clients and to help what government people call constituents, or you, people that are buying and selling product, is I'm very passionate about protecting you with life insurance and long-term care and fixed annuities and protecting your retirement. That's what I do every day. So I go as a lobbying group with a group called NAIFA, National Association of Insurance and Financial Advisors, where I'm the vice president of programming for them for the state of New York, and very involved on their board and very involved nationally in these products. And I went and spoke to the legislators, and that because we have a lot of issues nationally, and particularly in New York. In New York, we are void of a lot of different product that is available outside New York. Now, I work across the country, but I'm very sensitive to products that are outside New York that can help you and protect your future that I can't get in the state of New York. And there's a variety of reasons. It's regulation, it's this and that. But I want you to know that I'm out there fighting for you. And there are congressmen and legislators that need to know what your pain is and need to know how to solve some of your issues and need to solve some of their issues. One of their biggest issues that the government has that we share is protecting people for long-term care. And why does this government care about that? Because Medicaid, after you impoverish yourself, not Medicare, Medicaid takes over, and they're the largest insurer in the United States to take care of your long-term care needs, or what we call your custodial needs. It doesn't have to be in a nursing home. God forbid that we should ever have to go there, or in assisted living, but in our own homes. Taking care of us, getting up, helping us, use the bathroom, helping us eat, helping us get to the store. All these things as we age, we need. And one of the things that I was talking about earlier is, if you had a home in Long Island, let's say the average home is $750,000, and you had a 70% chance that that home would go on fire, and there was going to be a fire, how much would you pay to insure that home? How much premium would you pay to say, you know what? I want to ensure, because I know there's a 70% chance my home is going to be on fire, I'd certainly pay $5,000 or $6,000 a year to insure that $750,000 home. That's what long-term care insurance does. There's a 70% chance that you're going to need some sort of help around your home or nursing home. Health insurance is not going to cover it. Your family member may or may not be able to assist you. So that's one of the big issues that we talk about here at the Main Street Code for Financial Success. Listen, if you need to reach me, I'm at themainstreetcode.com, or always reach out to me for questions at 631-647-4694. As part of your portfolio, as part of everything you do, as part of your assets, protection is very crucial, whether it's for your legacy or for yourself. So reach out to themainstreetcode.com, and we'll be right back after commercial. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. Please reach out to me at 631-647-4694. We help hundreds of advisors across the country with their needs with life insurance, long-term care, fixed annuities, disability insurance. And one of the other services that we provide is we help you be a quarterback to your financial success. So if you need an attorney, an accountant, or somebody to help coordinate your plans, we're here to help you. So one of the situations that happened this week is I was visiting with a client, and I know they might be listening to this show, and I hope they are. And one of the things occurred that I realized that the spouse of this client was having some memory issues and speech issues, and we advised one of our guests to speak to them because they understand that there are going to be some situations down the road because that spouse has been handling the money and everything else. And mental health and mental illness is something that occurs with so many of us. Alzheimer's and mental deterioration. It's a chemical thing, and it's something we need to prepare for if we can't not just physically do what we used to do, but also mentally. As we're living older and older, and medical science has gotten us older and older, still our brains are still a function that deteriorates over time, and that can create a lot of problems for your family, both financially and emotionally, when these things happen. It can limit you in your driving and a lot of your daily activities, and can definitely impact everyone around you. So I caution everybody should have a mental health assessment and understand what are the next steps. What is this going to mean a year down the road, 5 years down the road, 10 years down the road? Alzheimer's can last on average 14 years. So part of the issue with long-term care, and we've been talking about long-term care a lot because a lot of people are upset that have bought long-term care insurance and have bought it years ago, and they've seen price increases. And if you've seen a price increase and you're concerned about it, reach out to us, because maybe we can alter your plan or devise a plan that will coordinate your long-term care insurance with something else. The long-term care industry, when they came out with long-term care insurance, they actually underpriced it. Everybody says how expensive it is, but if you're spending $5,000 a year for long-term care, you can use that up in 20 days, $5,000. Okay, very easily. The cost of care here is easily $400 a day. $400 a day. $300 a day. You write those checks, and then you're worried about paying $5,000 for a year? And the likelihood is 70% of you are going to need some sort of long-term care. You think about those numbers, and you think, I love when attorneys say to me, oh, it's expensive. And they tell the client, oh, it's expensive. No, what's expensive if you need care? That's expensive. And I can't tell you one family that hasn't been impacted. Now, here's what happens with long-term care. Let's say you're 50 years old and you have 70-year-old parents. Okay, your mother or your father starts failing a little bit, and then you decide that you're going to help them. Okay, great. So first, you're going to help get the groceries. Then you're going to help with this. Then you're going to help with that. All of a sudden, you're a caregiver. Now, you have children at home. Maybe you have children in college. Maybe you have grandchildren. There's 3 generations that are now impacted. What people don't realize, when they start becoming that caregiver, all of a sudden their health deteriorates. They're losing sleep. They may be not taking a promotion or leaving a job to take care of their parent. What does that do to their retirement? And how does that affect their kids and their grandchildren in the time they're spending with them, trying to spend time with their parent? It affects them financially as much as the person and that spouse, if there's a spouse. Not only is it affecting them financially, but all of a sudden you're taking money out of your pocket taking care of that person, whether it's you're leaving your job or traveling or buying groceries, and all of a sudden things may be deteriorating in your little fit house and family, and you won't even realize it because you're doing the right thing. You're taking care of your parent. Naturally, a child's going to take care of his parent. Listen, our parents took care of us forever. Now it's our turn to take care of our parents. But now all of a sudden, are we neglecting our children? Or maybe neglecting our grandchildren? We can't be 6 places at once. Or are we neglecting our work? And then all of a sudden sacrificing our retirement or sacrificing our children and time that we need to be spending to take care of our parent. That's part of what we call the sandwich generation. And you know what? It's the sandwich generation has becoming not 1 generation, not 2 generations. We're talking 3 and 4 generations now, because we are able to live longer and longer and longer. And that impact goes through generation upon generation upon generation. And you may not be realizing it, but I want to make you realize it now so that you take action and plan now. And if you understand what you're doing, or your spouse understands, all of a sudden we're not going to have enough money for retirement. We're going to have to work another 10 years. Well, wait a minute. Let's make a plan. Part of that plan may be buying long-term care insurance. Part of that plan may be buying life insurance. Now, many of the life insurance plans now have a long-term care thing, so you can use your money to do both. Have a life insurance protection and or long-term care protection. Now, the beauty of that is, if I don't need the long-term care, that money is left behind for my family and protects my family. That's the beauty of these hybrid type plans. One of the proposals from that Steve Stern, Assemblyman Steve Stern has, is having the long-term care proportion, and this is why I was in Albany, and I support this wholly, and I'm going to have NAFA support this wholly, is to have the long-term care portion of the life insurance on these hybrid plans be tax deductible. What a great... I'm going to have Steve Stern on the air because this is brilliant. And believe it or not, it's already been done in other states. So this is not brand new, but this is the kind of thing that I'm talking about in Albany. Is let's have a tax deduction to incentivize people to protect people from themselves and protect the government from having to fork out money for Medicaid. So it's good for them. And of course, it's good for you, and it protects you and your family. So we do a lot of hybrid long-term care life insurance planning in conjunction with your retirement planning and everything else. The problem with most people is they don't plan for the thing. They're thinking about the market. Listen, you have 100 different TV programs all day. Oh, the market's this, the market's that. Buy this, buy that, do this, do that. That's not a retirement plan. A retirement plan takes into account not only your investments, it takes into account your taxable, what's taxable today, what's taxable later, what's tax-free down the road, and there's a protection element in there that's done with life insurance and long-term care. And there's a legal element in there to protect our assets for our spouses and for our children and for future generations. That's all part of retirement planning. It's not an investment advisor and that's your whole plan. It's not an accountant and that's your whole plan. It's not a lawyer and that's your whole plan. It's an insurance, legal, accounting, financial, investments, taxing, tax-free, tax-deferred. All that comes into one plate, and we help be the quarterback and coordinate all those people if you don't have them all coordinated. If you have a team, you're one of the fortunate ones. If you don't have a team, call us. We'll help you put together a team that's out there to protect you and your family. I'm Neil Himmelstein, and you can reach me every Friday at 3 o'clock at the Main Street Code for Financial 6. Every Friday at 3, I'm here, and I can always be reached at 631-647-4694. If you're a financial advisor, if you're a client, if you're an attorney, and you want to talk to me, please reach out and get me. MainStreetCode.com, 631-647-4694. Have a great weekend, everybody, and Happy Mother's Day!
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.